Greetings, my friends. I'm thrilled to have you here with us today. As we embark on this journey of discovery together, we'll be exploring an intriguing question that's been on the minds of many. This question is none other than why a select few, a mere 5%, find success in the realm of investing, while the vast majority, a staggering 95%, unfortunately, do not. So buckle up and let's dive right in. Today we shall delve into the reasons why only 5% succeed in investing while 95% don't. The first reason many stumble in investing is the lack of knowledge. It's a harsh truth, but one we can't ignore. Just like you wouldn't pilot a plane without first learning how to fly, you can't navigate the turbulent skies of the investment world without a solid understanding of the basics. This includes not just knowing about different markets, but also understanding various financial instruments and how they work. You familiar with bonds, stocks, mutual funds, or real estate investments? Do you understand the difference between a retirement account and a brokerage account? This knowledge is just the tip of the iceberg. Understanding the trends, recognizing patterns, and making sense of market indicators are also crucial to the investing journey. Without a grasp on these, it's like trying to sail across the ocean without a compass or a map. Knowledge, my friends, is the key to unlocking success in investing. It's the foundation upon which all successful investment strategies are built. Now onto the second reason, impatience. Picture this, you're in a bustling city, the traffic is heavy and you're running late. What do? Do you honk your horn relentlessly, weave through traffic, risking an accident, or do you remain patient, understanding that the traffic is out of your control? The same principle applies to investing. Impatience can lead to hasty, ill-informed decisions that can result in significant losses. It's the impatient investor who jumps ship at the first sign of a market downturn, selling off their investments and often missing out on potential rebounds. It's the impatient investor who chases the next big thing, hopping from one investment to another, never allowing their investments the time they need to mature. In contrast, the patient investor understands that success in investing doesn't come overnight. It's a marathon, not a sprint. They know it takes time to build wealth, and they have the fortitude to weather the market's ups and downs. Remember, patience is not simply about waiting, but the ability to keep a good attitude while waiting. Moving forward to the third reason, fear and greed. These two emotions are powerful. They can lead us to act irrationally. And when it comes to investments, this irrationality can cost us dearly. Fear can make us sell our investments at the wrong time, often when the market is low, and we stand to make a loss. Greed, on the other hand, can lead us to hold on to investments for too long, in the hope of a higher return, even when the signs suggest it's time to let go. These emotions can cloud our judgment and lead to poor investment decisions. The key is to approach investing with a calm, rational mindset, making decisions based on careful analysis rather than emotional reactions. Remember, successful investing isn't about getting rich quick. It's about steady growth over time. And if you're enjoying this video, don't forget to hit the like button. The fourth reason is the lack of a plan. Now, this might seem obvious, but you'd be surprised how many people dive headfirst into the world of investing without a clear roadmap. It's like setting out on a cross-country trip with no map, no GPS, and no idea where you're going. Having a clear investment strategy is absolutely vital. It should be a comprehensive guide, outlining your financial goals, your risk tolerance, and your timelines. It should lay out which types of investments align with your objectives and which ones to avoid. It should guide you when to hold, when to buy, and when to sell. Think of it like a lighthouse, guiding you through the often turbulent waters of the financial markets. Without it, you're just drifting aimlessly at the mercy of the tides. And let's be clear, that's not investing. That's hoping, praying, and yes, gambling. Without a plan, you're merely gambling, not investing. The fifth reason is following the crowd. The crowd, a seemingly safe place, a comfort zone where most people feel secure. But let me tell you, investing isn't about safety in numbers. It's about careful analysis, strategic decisions, and trusting your own instincts. When it comes to investing, following the crowd often leads to buying high and selling low, the exact opposite of what successful investing entails. The crowd tends to get overly excited when prices are high and overly pessimistic when prices are low. This is a dangerous pitfall that can lead to significant losses. Instead of following the crowd, successful investors do their own research, form their own opinions, and make their own decisions. They understand that the crowd is often driven by emotion, not logic, and that can lead to poor investment decisions. So next time you're tempted to follow the crowd, remember it's your money, your investment, and your future at stake. Remember, the crowd is often wrong. Let's talk about the sixth reason, high expectations. It's natural, almost human, to dream big, to aim for the stars. But when it comes to investing, this tendency can sometimes lead us astray. You see, the world of investment isn't a lottery ticket, it's a game of patience, strategy, and realistic expectations. Imagine you're a gardener. You plant a seed, but instead of watching it grow over time, you expect a fully bloomed flower the next day. Sounds absurd, right? That's precisely how unrealistic expectations work in investing. They set you up for disappointment and worse, financial loss. Investing is not about getting rich quick, it's about building wealth over time. It's about understanding market trends, analyzing risks, and making informed decisions. Yes, the stories of overnight millionaires are enticing, but they are the exception, not the rule. Set realistic expectations and you'll be less likely to be disappointed. And finally, the seventh reason, a lack of persistence. Many people believe that investing is a quick path to wealth, but this couldn't be further from the truth. It's a long, winding road filled with stumbling blocks and detours. Those who lack persistence, who give up at the first sign of trouble, will never see the fruits of their labor. They'll miss out on the cumulative benefits of compounded returns, the magic ingredient that turns small investments into substantial wealth. To succeed in investing, you must be willing to stick to your plan even when the going gets tough. You must be willing to learn from your mistakes instead of letting them discourage you. You must be willing to weather the storms and hold steady even when others are panicking and selling off their stocks. Persistence, my friends, is a critical ingredient in the recipe for success in investing. Now, let's summarize the 7 reasons we've discussed today. We started our journey with the first stumbling block, a lack of knowledge. Without understanding the basics of investing, one is bound to make misguided decisions. Then we moved on to impatience, an all-too-common trait. Remember, Rome wasn't built in a day, and neither is a successful investment portfolio. Our third reason was the dual-edged sword of fear and greed. These two emotions can cloud our judgment and lead us astray from our investment goals. Next up was the lack of a plan. Without a clear roadmap, it's easy to lose our way in the complex world of investing. We then touched upon the danger of following the crowd. As independent investors, it's crucial to make our own informed decisions rather than being swayed by popular opinion. Our penultimate reason was high expectations. While optimism is important, unrealistic expectations can lead to disappointment and rash decisions. Finally, we talked about the lack of persistence. Success in investing doesn't come overnight. It requires grit, determination, and the will to stay the course, even when the going gets tough. It's clear that the path to successful investing is riddled with potential pitfalls, but with the right knowledge and mindset, these can be navigated and even turned into opportunities. For more resources, do check out the description below. If you found this video helpful, do give it a like. And if we've earned your support, don't forget to subscribe to our channel. Until next time, my friends, invest wisely.